And I'm telling you right now, a recession is coming. But I'm also telling you, it's not because of these tariffs. I've explained it why so many times. I don't want to really explain it now, but it's about money rotation through long-term and short-term bonds. There are $28 trillion in a zero-sum bond game. I know the market is more than that, but it's not zero-sum. It's not really worth 28 or some odd trillion dollars. That's fake money. The bond market is real money. $28 trillion of U.S. security bonds right now. That gets moved from short-term to long-term. And as those move around, that dries up money for investments. So when the yield goes down like it did and inverts, right? When it reverses back up, every time we have a recession. And the reason why is it dried up the money for investment in new terms. That's what you're going to see. I don't care who the president is, what choices he makes. There is no way to manipulate $30 trillion. It's just not. And the majority, I know not all $30 trillion are going to, that's what's going to happen. And you're probably not going, you probably would hear about this if we didn't have the tariff issues and everything else. But this happened a while ago, by the way. It happened last year. But it takes a while for that money to actually cause an effect. And it could take up to a year or so to actually happen. But the tariffs might speed it up, though. I'm going to be honest. But it's going to happen, I think.
Yeah, that's an interesting... Yeah, I like, Greg, what you said there, because a lot of these levers that are pulled, and this is why the Federal Reserve takes so long to raise and lower interest rates, they're playing a game of 3D chess.
Yeah. That's
a long-term game. And you know, Trump's the best at announcing his policy at a press release before he can even talk to any of his advisors about it.
But it doesn't matter what the Fed says, right? Because this is an inverted yield from the 2-year to the 10-year, right? So they can raise the to 5 or 2. It doesn't matter. Both of those go up and down together. It's when this one, which is the long-term one, should have a higher rate, inverts to the bottom side, right? That's not on the Fed. The Fed cannot affect that in any way, shape, or form. I guess they could by limiting sales, but it's on demand, right? People want these. So, and then when they switch back to the norm, now people think, hey, now we're back to our normal. We think, hey, short term is going to be this and that, and it screws you over, right? So as that money rotates in, we're going to get hit. The good thing is it's happened every time. It's never not happened. So it could, not happen this time, but it's where the money is, and that's what we follow. The stock market manipulated. You cannot tell me that since COVID, we're 100% better, right? Or 200%. You can't say that. You can't say that we're 500% better than 2010 in terms of manufacturing and stuff. It's just impossible. Now, you add inflation and stuff, I know that comes down.